My name is Austin Bradford. I work at the Bank of Dade. I'm a loan officer here for a little over 2.5 years. Today we're going to talk about building your credit and why credit is important in your life. So there is a difference between credit history and credit score. At our bank, we do not use a credit scoring system. We only look at your credit history. Your credit history tells us how you've paid your accounts. Were you on time? Were you late? How many accounts do you have open? How many accounts have you had in the past? Whereas your credit score is just a number comprised of all of those things. Credit scores, there's no rhyme or reason necessarily. We don't have an exact formula of how that works. So if you miss a payment, your credit score is going to drop, but I can't tell you it'll drop by 5 points for making your payment late. There's just a lot of different things that go on with that. Sometimes when you pay a loan off, your credit score will drop and then turn around and come right back up. So credit score doesn't always give you the full picture of someone's credit history. Prior to working for the community bank, Bank of Dade, I worked at a large corporation that used credit scores. With the credit score system, they had a number, 625. If your score was below 625, they did not care the reason, you were not getting a loan with them. With the smaller banks, a lot of them will use credit history, and we look at your credit history. So we don't know what the score is, but your score may have been below that, but there's a good reasoning or explanation for that. And we can look at your credit history and say, okay, this person has been perfect for 4 years, and then they may have had a job layoff or something that caused them a divorce, some family event that caused them to have worse credit for just a short period of time, and now they're over that and they're ready to start rebuilding their credit. So when we look at their credit history, we can see things like that. If you don't have credit or you have bad credit, a good place to start is a community bank. We are able to work with you and we offer some specific products for building your credit. A savings secured loan is one of these products that we could use. With savings secured loan, what you do is you take the money that we would give you from the loan, say $500, we're going to put this into a savings account and we're going to put a lock on this money that you can't touch until the loan is actually paid in full. So with this, you have a lower interest rate because you're borrowing money against your own money. So on that, it's about 3.25% is your interest rate. And then you would make monthly payments. Let's say we set that up for a year. You're going to pay around $45 a month. And at the end of the year, when everything is paid off, the $500 that we had set aside in that account would become yours, and you would only be paying for the interest. So the total cost of the loan is only going to be about $20 over the whole year to start your credit or to build it back up from where you were. Savings secured loans are not something that is just here at the Bank of Dade. Most community banks have a similar product to that. It may not be exactly like that, but it is something that most banks offer. The good thing about savings secured loans are you can do this by yourself. You don't have to have a co-signer. You don't have to have someone else, a family member, a good friend to come in and say, hey, I'm going to sign for them. They can do this on your own. The only thing that would knock you out from being able to do a savings secured loan by yourself would be if you have bankruptcy in the past 10 years, any tax liens, or any judgments that are on your credit report. Other than that, you can come in and do a savings secured loan all by yourself. If we start out at $500, you pay that, everything goes well, come in, do another one. Maybe this time we bump it up to $1,000. That's gonna show us, hey, they can handle a little more payment, a little more responsibility. And then at the end, once we've done a couple of savings secured loans, we did the 500, possibly we did the 1,000, then you might be able to come in and do a vehicle loan or a personal loan, just a signature loan for a lower amount. A personal loan is a loan when you come in and we're not using anything for collateral. You're just guaranteeing it personally that you were going to come back and pay this. Some people call this a signature loan. This is something that small community banks do a lot for their customers that they have a really good relationship with. All community banks are very big on relationships, whether it be repeat customers or we have a deposit relationship as well. Relationships are huge in the banking industry. A deposit relationship is when you have a checking account or a savings account with us as well. Personal loans are used for a variety of reasons, whether it be buying propane for the winter, maybe they have some car troubles, they need car repairs, or possibly they need new tires. Coming in at Christmas time, with Christmas time coming up, a lot of people will be coming in to do small personal loans to buy Christmas gifts. The difference in good credit and bad credit. If you have bad credit, when you go in to buy a vehicle or you want to get that credit card, your interest rate is going to be astronomically higher than what it would be if you're going to have good credit. Your good credit, you're going to be able to negotiate more. You'll have a lower interest rate. It also affects things such as your car insurance, believe it or not. A lot of auto insurance people are using credit scores as a part of their predictive model. So if you have bad credit, it's going to cost you a lot more money in the long run. Depending on what job you look at, a lot of times your employer will pull your credit to take a look at that to see what kind of candidate they have. So it could possibly affect whether or not you have a job. Another thing is your landlord is going to look at your credit. So it could affect what type of housing you were able to get, or if you're able to get a house at all, or an apartment to rent. Credit scores range from 300 to 850. 300 is going to be the very worst, 850 is going to be the very best. A lot of people like to think that anything over a 700 is really good, and it is. A lot of people do not understand that having zero credit is actually worse than having bad credit. When people have bad credit, at least the creditors know they've had some credit history, they know what the actual problem is. If you have zero credit, then they don't know what to expect, so a lot of times they won't touch you. That's where something like a savings secured loan will come in handy to establish your credit. A personal loan is basically a loan on your signature. There is no collateral securing your actual loan. It is just a promise from the customer to us, the bank, that I'm going to pay this back. Now, personal loans do carry a little higher interest rate just because there's a little higher risk. We don't have anything to go collect if the customer does not pay for that. So you're going to look at a little higher interest rate there as opposed to, say, a car loan. On personal loans, we normally loan anywhere from $500 to $5,000. Of course, a lot of that's going to depend on your credit history, your relationship with us, how many loans have we done in the past, what does that relationship look like. In order to get a personal loan with us, we have to have a good credit history. Don't necessarily have to have a relationship with us prior, as long as your credit history is good, but a good history with us, good deposit relationship will allow you to get a personal loan. Any of our new customers have to have some form of government ID, whether that be a driver's license or just an ID in general. We have to have that. You're going to have proof of payment as far as your past income, your W-2, or a current pay statement. With your savings secured and our personal loans, we like to know where is your money coming from that you're going to be paying us back. An alternative to a personal loan would be like a payday loan. Those loans are high interest rate. You're looking at least 25% interest rates. So you're going to be paying a lot more over the life of the loan in interest versus our personal loans here are anywhere from 9 to 11%. So that's good. Half or less than half of what you would actually pay at a payday loan. Your payday loans are compound interest, so your interest is gaining a lot more rapidly than what we would be using here, which is simple interest, which is just compounded daily. Payday loans are an extremely bad option and should be absolutely last resort. Do not use if at all possible. Not only are your interest rates a lot higher, they have where they can garnish your wages from your employer. If you do a title loan, they could come get your vehicle, and it doesn't matter if you paid all of it except for the last $100 and you just owe just a little bit, they're still going to come get your car. On top of all the money that it's going to cost you, they don't report to the credit bureaus a lot of times. So not only are you paying a lot more for it, you're not gaining anything in return. No one's going to see, hey, look, this guy went here and paid for 12 months and paid perfectly, and it cost you a lot of money, but they don't see that. So you're not getting anything in return for paying on time. With compound interest, you are gaining interest on your balance of your loan, but also on any other interest that may be due. So if you miss a payment, you've got, let's say, $100 in interest, that is added to the balance when they refigure the interest the next month. So you're gaining additional interest on that, and it will just snowball into a larger and larger amount, making it harder and harder for you to get out of debt. An auto loan is another type of loan that we offer here. A lot of banks offer these as well. This is where we're using the actual vehicle to secure the loan. We take the title and we will put our lien on the title, and we hold that title as collateral until the loan is paid in full. This allows you to have a better interest rate than, say, just a personal loan, because we do have some security on the actual loan. If there was to be some trouble during the actual loan, we are a little more lenient than, say, the payday places, the buy here, sell. A lot of times with those people, if you miss one payment, they're gonna be after your car immediately. We try to work with people. Normally, we allow 60 days before we would have to come get the vehicle if that's something that we have to do. But as long as you work with us and stay in communication with us, we're gonna be a lot more forgiving than the buy here, pay here, or the payday loan people. Communication is absolutely key with community banks. It's that relationship like we were talking about earlier. If you come in and you sit down and tell me, hey, I got laid off last month, I'm having some problems, there's some things that we can do. Possibly we could look at doing a skip a payment, put that payment at the end of the loan. Just as long as you're making an effort, you're coming in, you're talking to me, you may only be able to pay $20 every week for the next 2 months until you get back on your feet. But as long as you're making that effort, we're willing to work with you and do what we can to make that happen so you can keep your vehicle. Once the bank actually repossesses a vehicle, we have to hold on to that for 10 days to give the customer a chance to come back to tell us what is going on or what might be happening so they could possibly get that back. After 10 days, we do sell that vehicle, whether we put it in the parking lot to sell it or we run it through an auction. At that point, we do try to sell the vehicle to recover our loss. Another type of loan would be an equipment loan. This could be, say, a tractor, possibly a four-wheeler or a side-by-side, where we take those as collateral. Now, a lot of times your equipment does not have an actual title, so we'll do what's called a UCC, and we file that with the state. It uses the serial number, and it just lets the state know that, hey, we do have claim of this property until this loan is paid in full. So let's take a second to talk about some mortgage loans. A lot of people see this as the ultimate end goal of building your credit. You've probably had the money to do some of the things that you've borrowed money from in the past, but that was just to build your credit so that one day you can eventually buy your own home. With buying a home, there's a little more in-depth process. Obviously, we're dealing with a lot more money, so things are a little more complicated. We do need 2 years tax returns, your W-2s. We have to be able to prove, it's federal guidelines that we be able to prove how much money you make and that you're able to actually pay this back. We also here do not offer 100% loans, so you will have to have a down payment, somewhere in the neighborhood of 10 to 20% down. That will be required. But we work with you. We know if you've developed this relationship with us, let's say you started off with the save and secured loan, and then you went to the personal loan, and then you borrowed vehicles or borrowed money for vehicles. Now that you've done all these things with us, we've developed that relationship. Even if you started out with really, really bad credit, if you have continuously improved, you've made payments, you've stayed in contact with us if something has went wrong, we're going to be able to work with you and hopefully get you that mortgage. Another option in product that uses credit is credit cards. There's several different types of credit cards. Sometimes people can start out with a secured credit card, and that's where they have to put up a sum of money up front to be able to use against that. It's kind of like the save and secured loan, but it's actually on a credit card, so the balance can go up and down. So with a credit card, you have a master limit, let's say $1,000. You can go buy groceries, you could spend $100 here, you could spend $300 here. At the end of the month, whatever your balance is, they're gonna calculate a minimum payment. Your interest rates normally on credit cards are higher than what they're gonna be on personal loans or savings secured loans, of course. They're a little higher, but that's just because there's a little more risk involved in that. But it works, you pay it up and down. You don't want to max your credit card out. You don't want to carry, let's say if it's a $1,000 limit, you don't want to max your credit card out with $1,000 worth of purchases and then make the minimum payments of say, $35, $50 a month, because over the long run, you'll end up paying several $1,000s back before you ever get that paid off. Credit cards will help you build your credit some. but one credit card is not going to do a whole lot for you. You really need to have some of those loans, the personal secured loans, to actually get that built up for you. Credit card companies are really good at advertising. They will bombard you with lots and lots of offers, and you have to be very careful. If you max all of your credit cards out, not only is that going to lower your score, that affects your credit score. When you have a credit card that has a $1,000 limit and you have $1,000 charged to it, that reports negatively on your credit. And also, it's just so easy to get credit cards that you could get 5 or 6 credit cards, and then all of a sudden all these credit cards are maxed out. Well, now you have $10,000 in debt, and you've already bought all the goods, but you have to come up with a way to pay back this $10,000 in debt. A lot of times that gets people in a lot of trouble, and that's where they have to file bankruptcy, which basically kills your credit and makes you start all over. Credit cards are not necessarily a bad thing. I have a credit card. I keep it for emergencies. You never know when you might be out of town, the vehicle breaks down, you're gonna need that extra money. The smart way to use a credit card is to keep a low balance on that, or even a zero balance. Just say buy your gas every month with your credit card, and at the end of the month, pay that credit card off in full. That way the interest is not gaining on you and you don't have this huge liability. Have 1, maybe 2 credit cards is not a bad thing at all. It absolutely can help your credit score out, but just don't get 5 credit cards, max them out, and then you've got a serious problem. A lot of credit cards have a lot of different options. Some of the credit cards will charge you an annual fee just to be a member, just to hold the card. You have to pay a certain dollar amount. Other credit cards are gonna try to tempt you with the rewards points. They're all about these rewards points or cashback points that they're gonna give you. They do that by charging you a higher interest rate. So just because it has some sort of rewards program doesn't necessarily mean that's the best credit card for you. You need to look to see what the actual interest rate is going to be. And sometimes you can go through banks like ours or other small community banks to get a credit card that has a little lower interest rate. It doesn't have that rewards program, but it's not going to cost you a lot of money. Anytime a credit card company is offering you something, you're paying for it somewhere. It's important to keep a watch of your credit. You never know, with all the fraudulent activity that's going on these days, somebody might open up a credit card or get a loan in your name that's not actually you. It's very important that you keep a watch of your credit. There's apps out there, there's Credit Karma, things of that nature that allow you to monitor your credit. Equifax, Experian, and TransUnion are all required to give you your credit report once a year for free. If you find something that is incorrect, you can dispute that information with them by contacting them, and there's a process to go through, some forms you'll have to fill out, but then that way you can get that stuff removed if it's not you, if it was fraudulent activity. Monitoring your credit is great, but hopefully we don't ever get to that point, and you don't get there by staying in contact with your bank. I'll give you an example. We had a customer who had been a longtime customer, had a vehicle loan, no problems, been rocking on solid for 3 or 4 years. All of a sudden, we didn't get paid. 30 days go by, we've tried to contact the customer, we can't get in touch with him. Well, it comes up on 60 days late. We still haven't heard from the customer. We've sent letters, we've called. At this point, we don't have any option but to try to repossess the vehicle. We were able to repossess the vehicle. We got the vehicle. After establishing that we have the vehicle, the customer comes in and talks to us and tells us that he had been laid off from work, but actually had a tax check coming in 2 weeks. So this customer ended up costing himself a lot of money just because he wouldn't come in and talk to us. Not only did he have to pay the repossession fee, he also had to pay to get that loan caught up, when if he would have contacted us on the front end, we could have done something for maybe $10 and skipped a payment or put that payment towards the end, and we knew that he was getting this tax check. And all this was because he was afraid to come contact us. You have to stay in contact with your bank if something like this happens. If you're not comfortable coming in, talking face to face, give us a call. If you're not comfortable doing that, text us, email us. We don't care. As long as there's some type of communication explaining what is going on, or, hey, I've got a check coming in 2 weeks, just let us know and stay in contact. Once you get that job and you've got that deposit account over here, you have that checking account, and you've been working for a couple weeks, a couple months, and you've got that job started, come in, sit down, talk to me. Let me know where you want to be, what your goals are. Let me help you get there. And normally that's going to be starting out with that savings secured loan. It's the safest and most cost-effective way to get your credit started so that we can move forward from there to buy that new truck or buy that house that you're looking to get.